Renting versus buying a house in Germany. What's actually better for your wallet and your lifestyle? With high property prices and strict rental laws, this choice isn't as simple as it sounds. So before you make a costly mistake, let's look at the real pros and cons of each option. You're probably wondering, is it better to rent like most Germans do, or take the plunge and buy? Now, the German housing market is unique. Ownership rates here are lower than in many other countries, and renting is often seen as a more practical choice. But buying has its appeal too. So let's break down what you need to consider. By the way, if you're new to the channel, my name is Essen. I'm a researcher, and on this channel we discuss how to succeed financially in Germany. If you are renting at the moment and are interested in buying a house or an apartment in Germany, the first thing you usually do is look at your monthly rental costs and compare them with a possible loan payment after a purchase. The reasoning behind this is quite simple. If the monthly payment to the bank is not higher than your current rent, it is worth buying a property, right? However, this reasoning has some fundamental faults. Both the monthly rent and the installment for the bank are just a snapshot. Mortgage payments usually run over several decades. So which option is better in the long term would only depend on the current rents, purchase prices, and interest rates, but also on how they develop in the coming decades. Historically speaking, interest rates had been falling since the financial crisis in 2008 up until 2022. This led in an increase in the demand for real estate in Germany. The low interest rates also meant that rents and purchase prices were diverging. Tenants were more likely to consider buying when moving houses. Rents then rose more slowly than purchase prices. But since 2022, interest rates have shot up very quickly, and buying a property has become less affordable for many, leading to increased demand in the rental market. This surge in demand has also empowered landlords to increase rental prices. So zooming out, real estate prices in Germany increased by 225% from 2008 till 2022, then dropped about 15% till Q1 of 2024, and have gone up 5% in just the last 2 quarters. In terms of rent inflation in Germany, it has stayed between 1.3% to 1.5% per year from 2002 till 2022, and up by 2.2% by Q1 2024. So it's not as simple as comparing the rent you are paying against possible mortgage payments. Alright, so how can you find out which is better, buying or renting in Germany? Well, you can start with the rent to purchase ratio. This is a crucial metric used to evaluate the relative affordability of buying versus renting in a specific housing market. This ratio helps you assess whether purchasing a property is financially advantageous compared to continuing to rent. If you want to assess whether buying or renting is cheaper in your desired region or district, you should first make sure that you compare houses or apartments that are as identical as possible for both options. Same living space, same age, same level of furnishing, etc. If you are already interested in a particular property, you already know the purchase price, and then you still need the information about the rent. Make sure that you're making a comparison with a current asking rent for a comparable property and not just the figures from previous years. What is important is the basic rent that a tenant would have to pay, which is the rent without any additional or operating costs. Then divide the offered purchase price by the annual basic rent for the property. A property with a purchase price of 300,000 euros and an annual rent of 15,000 euros would have a rent to purchase ratio of 20, which comes from 300,000 divided by 15,000. A ratio below 20 indicates that buying is likely more favorable than renting in that market. This suggests that property prices are relatively low compared to rental costs. A ratio above 25 suggests that renting might be a more financially sound option, as property prices are relatively high compared to rental rates. You can also compare the upfront cost. For buying a property in Germany, we first have the down payment. The down payment is often the largest upfront cost. In Germany, banks typically require a minimum of 20% of the property's purchase price as a down payment. However, some banks may request even higher amounts depending on factors like your credit history and the location of the property. For example, for a property priced at 369,000 euros, a 20% down payment would amount to 73,800 euros. This amount is required before finalizing the purchase and is essential to securing a favorable mortgage rate. Then, closing costs. In addition to the down payment, there are several mandatory closing costs in Germany that you should account for. These fees and taxes can range from 10% to 15% of the purchase price and include the notary and land registration fees. These fees are legally required in Germany. The notary's role includes formalizing the sale contract, ensuring the process is legally binding, and registering the property transfer in the land registry or the Grundbuch. Together, these costs typically add up to around 1.5 to 2% of the purchase price. Land transfer tax, Grunderwerbsteuer. This tax varies by federal state, ranging from 3.5% to 6.5% of the property price. For a property valued at 369,000 euros, this tax would range from approximately 12,915 euros to 23,985 euros. Real estate agent commission, Maklerkosten. If a real estate agent is involved, the buyer is usually responsible for paying the agent's commission, which ranges from 3% to 6% of the purchase price. In some German states, both the buyer and the seller share the agent's fee. For a 369,000 euro property, the agent's fee would cost between 11,070 euros to 22,140 euros. So altogether, closing costs for a 369,000 euro property would range from 36,900 to 55,350 euros, which is a substantial amount to include in your budget beyond the down payment. Renting a property in Germany includes far fewer initial costs compared to buying. The main upfront expenses when renting typically include the security deposit or the Kaution. Landlords can legally request a security deposit up to 3 months' rent to cover any potential damages or unpaid rent. This deposit is held by the landlord and is returned at the end of the tenancy, provided the property is in good condition. First month's rent. This is the initial monthly rent payment due before you move in, and in some cases, broker's fee. Although the Bestellerprinzip law requires the party who hires the broker to pay the fee, there are still instances where tenants may encounter a broker's fee if they directly engage a real estate agent to find a rental place in Germany. So for a rental with a monthly cost of 1,000 euro, the upfront cost would be around 4,000 euro security deposit plus the first month's rent. Please hit the like button if you're getting value from this video and consider subscribing. Then we have the monthly costs. As a renter, rent is the primary monthly expense. Your rent can vary widely based on location, property size, and market demand. For example, a one-bedroom apartment in Berlin may cost between 800 to 1,200 euros per month, whereas similar properties in smaller towns may come closer to between 500 to 800 euros. Some rental properties include utilities such as water and heating within the monthly rent, while others do not. You as a renter are generally responsible for paying additional utility costs, for example, electricity, internet, gas, etc., which are not included in the rent, averaging around 150 to 300 euros per month. If you decide to buy a similar property, the utility costs would remain the same as renting because they generally depend on your usage. In addition to that, you would be paying the mortgage payment. It includes the principal, which is the loan amount, and the interest. The exact amount depends on factors such as the loan amount, interest rate, and the loan term. For example, a 320,000 euro mortgage with a 20-year term and an interest rate of 3.9% would result in a monthly payment of approximately 1,700 euros. Initially, a large portion of this payment goes towards the interest, while the principal repayment gradually increases over time as the loan balance decreases. You also pay property taxes or Grundsteuer. Property taxes in Germany are an annual fee paid to the local government. These taxes vary depending on the location and the assessed value of the property, typically ranging from 300 to 800 euros per year or 25 to 67 euros per month. Many homeowners pay property taxes in monthly installments. Homeowners insurance or Wohngebäudeversicherung. Homeowners insurance protects against events such as fire, storms, and theft. Insurance costs can vary depending on property location, age, and the coverage needs, with premiums ranging from 200 to 700 euros per year, which is about 17 to 58 euros per month. Maintenance and repair. Regular maintenance and repairs are needed to keep the property in good condition. A general recommendation is to set aside 1 to 1.5% of the property's value annually. So for a property valued at 400,000, this translates to 4,000 to 6,000 euros per year, or approximately 333 to 500 euros per month. This reserve is crucial to cover routine upkeep as well as unexpected repairs. Potential homeowners association fees or house guild. If you purchase a property in a community with shared facilities, you may also have to pay the house guild. These fees vary widely, typically covering landscape, maintenance of common areas, and shared amenities. The average monthly household in Germany ranges from 100 euros to 300 euros, depending on the level of service and location. When weighing buying versus renting, don't just think about the financial side. Consider if you see yourself as a long-term owner or a tenant. Living in a building with both owners and tenants highlights the different perspective each has. Owners face regular maintenance costs, while tenants often deal with extra fees, lack of repairs, or rising rents. Both groups see benefits to their situation. Owners feel they are building equity with each mortgage payment. Tenants argue that their monthly rent covers their full use of the space and they don't have to handle repairs. They can rely on the landlord or the property manager for that. The idea that owning brings independence is partially true. As an owner, you're free from a landlord, but now have to work with a bank, local authorities, and neighbors, all of whom you will need to coordinate with over the years. Ownership also has regular upkeep. Many tenants prefer the flexibility renting provides. If you expect to move in a few years, renting lets you do that with minimum hassle. Selling property after just a few years is really a good financial move. But flexibility has its limits in today's rental market. Rent prices in many cities, even with rent control, are still high. So if you move, expect higher rents. Now ultimately, the choice to rent or buy depends on your personal and future plans. Think carefully about what aligns with your goals. When making this decision, consider both your personal preferences and the long-term financial view. To help you make the decision, let's make a quick comparison. If you buy an apartment priced at 300,000 euros, you'll likely need a 20% down payment, which comes to 60,000 euros. This leaves you with a mortgage of 240,000 euros. Assuming a 3% interest rate and a 30-year term, your monthly mortgage would be around 1,011 euros. But there are additional upfront costs that you will need to consider. Property tax about 5% or 15,000 euros, notary and other fees about 2% or 6,000 euros. Altogether, your initial costs add up to around 81,000 euros. Your monthly costs as a buyer don't stop at the mortgage. You'll need to set aside an estimated 150 euros for maintenance and repairs, 25 euros for property tax, and 20 euros for insurance. This brings your total monthly cost to around 1,206 euros. After 30 euros, you would fully own the property, having paid 551,160 euros in total, including the initial down payment, mortgage payment, and other costs. Here we are not including the house care. Now let's consider the same apartment as a rental. Assuming the rent is 1,000 euros. To move in, you would likely have to pay a security deposit for 3 months rent or 3,000 euros, which is refundable when you move out if there is no damage. For renters, monthly expenses are often a bit more predictable, though you'll still need to budget for utilities. Let's estimate these at around 100 euros per month. This brings your total monthly rent to approximately 1,100 euros. Over the 30 years, your rent payments will total around 396,000 euros, assuming the rent remains the same, which is unlikely, as rent may increase over time. With a 1% annual rent increase, the total cost for rent alone over the 30 years would be approximately 417,419 euros. Adding the fixed utility cost over the 30 years and upfront security deposit of 3,000 euros, the overall total cost of renting would be about 456,419 euros. If you're stuck around for this long, make sure that you turn on the notification so that you don't miss out on content like this one. Now, buying a property isn't just about the finances. It's also about your preferences and goals. Independence from a landlord is a big reason many people choose to buy rather than rent. While this is understandable, it's important not to overlook the financial aspect. Buying at too high a price can lead to significant losses over time. But if you buy at a reasonable price, you also start building savings for your retirement with each mortgage payment. As a renter, you also have options to build wealth. If your rent is low, consider starting a savings plan as soon as possible. Avoid keeping your savings in low-interest accounts. Instead, invest it long-term with a focus on returns. Be aware though that investments can fluctuate and you'll need to be comfortable with that risk. Now, if you follow this approach, you can still build wealth as a tenant, sometimes even more effectively than by buying property. Renting keeps you from locking most of your money into a single asset, which has its own risk. If property values drop in your area due to declining demand, owners bear that loss directly. So property ownership isn't risk-free. But looking at the development of real estate in Germany, owning a property can be quite lucrative over the long run. Now, if you think buying real real estate in Germany is more beneficial for you, then in this video I share how much house you can afford in Germany. And if you think you will stick to renting for the time being, then in this video I share how to invest your first 100 euros in Germany. So thanks for watching, bleib gesund, and I'll see you in either of these two videos.